Through 12 years of investing and thousands of trades, I realized that markets don't reward noise. They reward the preparation. And right now, the preparation for applied digital is quietly underway. If you're struggling to see what's actually going on beneath the surface with data center stocks, I'm going to walk you through the 7 indicators that I've been using here to earn over 100% gains on 7 different stocks in the last 6 months. So every one of those setups, for the most part, started out in technology related to AI, and we're going to get inside this data center watch list. And by the way, guys, we just entered a TSSI trade. We're up about 1,177 bucks it is at a resistance right now. And we had some big wins this year already in StockMate. We're staying hyper vigilant though, because the portfolio is already up about 66% year to date. We're only 15 days into the year. So let's go over APLD. Now, APLD is up in the last month tremendously. We've seen them surge from really the start here of January this year to now making a run as high as from $22 a share to as high as about $40 a share. So a 67% increase. We've seen them also recover from levels that we were anticipating. We've been covering them really since $3 a share, and we do have some long-term positions in the APLD stock. But the data center market has been having all these new companies pop up. You got APLD, you have IREN, you have Wolf Stock, you have NBIS, you have, let's see, Blaze. Of course, there's some established companies like Supermicro and AMD and others, but then you also have kind of the slightly newer players like CoreWeave and CLSK, and then TSSI, which is more on the data center tech configuration side. BITF, which is another. One of the common recurring themes from the companies that have had the greatest returns in 2025 and into 2026 has been that they are already receiving contracts from large technology companies that need the compute power to run their AIs. And so APLD has received some of those contracts, and they came out with some recent earnings that's driving them right now. And so one of the things, these are the 7 indicators. We're going to walk through number 1. The first walkthrough, again, is going to be the market. So the market of data centers is in the AI-driven market, and we have seen tremendous growth from APLD as a result of being in that market. But then on top of that, you have the actual revenue, and this is indicator number 2. The market is going to be determined also by real world usage. So you have the revenue there, but then the actual real world usage. I got a comment on my video, multiple comments from people that literally work at APLD saying, hey, we're seeing the build out of these different data centers and we appreciate the coverage, and here's what's actually happening over here and everything else. And so that's one of the indicators that we could say is pretty clear. Real world usage is strong and the market is growing. Let's get into indicator number 3, which is going to be the actual company's value to the marketplace and their product. And so if we look at APLD currently, we've seen some growth in their construction of data centers. APLD is pioneering the digital infrastructure innovator, delivering bespoke ground up AI data centers. So they're building the data centers, the AI infrastructure. You can see some of the pictures here. The unique thing about what they're doing that's giving them an advantage over a lot of other data center companies, and why we saw them come out with the $15 billion pipeline of building these data centers for some of the technology hyperscalers and AI, is that they build in cold places. That's right. There's so many different new data centers that are being sprung up. And if they're getting built in places like Phoenix or, Austin, Texas, there's high risk of things like hot temperatures, extreme temperatures, the volatility in the temperature, as well as humidity and potentially even flooding. And so it's interesting. They've really chosen to go north. They're up in North Dakota, and yes, they have liquid cooling, which is very important, but they also are building in a cold place to maximize uh, the ease of cooling. So minimized carbon footprint through renewable energy use. These data centers aren't insanely large, but they are large enough that you can see, this one right here is AI hyperscaler CoreWeave is contracted with them here. And this was a $9 billion deal or $7 billion deal, then increased to 11 billion. You can kind of see this sheer size, not insanely large. But then Applied Digital today just announced their co-founder here, Jason Zhang, as president. So they had some changes here. So that's new. But overall, you've got the new pipeline. Okay, and so their product is that they have these AI data centers that are to the point of generation, wind power, solar energy, and they're improving the market's growth by implementing those systems, the newest data center technologies, with companies like Supermicro, which they handle all of the racking systems that hold the GPUs, which are the computers that make it possible for the AI to compute, and partners like Dell, Intel, Hewlett Packard, and then one notable investor. Well, you have a lot of large investors in the company. You can go over to Prophecy AI. We were trading that this morning. Let's see. Let's search APLD here, get some analysis. But one of the notable investors outside of BlackRock, like big tech, Vanguard, you actually have NVIDIA that's investing in them. So they're big tech, actually, not I meant to say big hedge funds. So BlackRock is investing. You got some of the Goldman Sachs and State Street there, and you have NVIDIA investing in the company, holding about 8 million shares. On top of that, you see recently we've seen some purchases from the CEO and then the CSO, who was recently converted or promoted to the president position, has also bought more than he has sold here. And so CEO buying at the beginning of the year before a big surge, that was actually a really good indication you saw some growth. He bought in around January 5th. It's continued up about 40% from there. And while it's continued up, what goes up must not go up all the time. There's going to be volatility, and that's kind of what we see here. So as you can see in this 65% run, so again, we kind of got into the product and the offerings, and then the fourth indicator that I'm looking at here is going to be the technicals. So the technicals indicate that they have obviously this overall uptrend from $3 a share, and that they've recently surged to highs of that $40 price point. And we're anticipating a pullback down to $35. So we did get that pullback here on APLD. I haven't touched any long-term positions, but the short-term trades, we didn't have anything going because of the anticipation of the sell-off. And so we saw a correction down about 10% from their high of $40 or $39.50 or whatever, down to this $35 range, which is key. It's a key level of resistance, a previous resistance here. So oftentimes previous resistance will act as a support, especially in a bullish environment, which is what they're in right now. And you see that, for example, right here, when they were rallying up to 22, they used that previous resistance here as a support. They used the previous resistance of around this $29 range here as a support. And then you see previous resistance now at $35. They've been using it today as a support. The key is that they hold above this $35 price point. When we're looking at the trend and anticipating, let's say, a $40 price point or continuing up to that resistance or breaking out to all-time highs that they were touching back in October around $40 a share, they're going to need to hold that $35 level, stabilize a little bit, and continue some of the momentum. So if that's the case, we get into, the technical analysis indicates they've recently pulled back. You can kind of see this movement. You may be led to believe as they've pulled back that now stabilizing, we could see a stabilization here. There's 3 stages to reversal. So on a macro stage, you could see a reversal where first you have the initial trend. So this is not, there's a lot of lines, so don't get too distracted. But you got the initial trend here, for example, selling down. You got something like this. Okay, and then you have, rough consolidation, which is like a left to right type of move before you see a reversal. That's not the prettiest markup, but basically you got three stages: the initial trend, then you have the consolidation or the left to right, and then you have the reversal or the continuation. And so we see that time and time again. In this case, we saw a slight, you could say, we had an uptrend happening. Okay, so very consistent uptrend here from about $20 a share. And this is, again, I feel like I'm drawing so many lines, so bear with me here. What we don't want to see is like, this is the resistance. We see them maybe pull up and then sell back down around that $40 range, back down into, I don't know, 25, but I don't think that's going to happen on the technical side, because on the support levels here at $35, they have a greater uptrend, so they're targeting that they would do a move kind of like this and continue up into $40. But then on the shorter term trend, kind of see the $39 level selling down, and then you got this previous resistance here around 30, 38, somewhere around here, and then you got that level. Okay, so that's kind of like this downtrend, you could say, in the near term that we've seen over the last week. So since January 12th down to January 15th, they've sold down. And then you have this kind of consolidation here, kind of a support around 37, this, and this is that left to right move that we were just talking about. That is the left to right move potentially of support at 35, 34.75, somewhere around here, and resistance here around what is also a previous support around 36.50. So somewhere around here would be kind of the levels to watch. So now they're basically consolidating between this 34.75 and this $36, $37 range right here. And perfect scenario would be that they don't continue down. And in fact, it's a fine scenario because we can just buy more long term. But for short term, just the medium term growth, if they can't hold, or if they do hold, you're looking at 34.75, a recovery back up to 36, and then that third stage of a reversal, so out of the consolidation between 34.75 and 37, that they break out above 37 and then continue the overall trend that they have had since about $20 a share. So kind of continuing this trend here up into that $40 range. So it probably looks something like this. Once again, it's kind of watching for that third stage here, something like that. So that's kind of the current levels to watch. They break below that 35 or 34.75. A key level to watch then is actually as low as $30. So potentially, if they were not to hold this, they could sell down another 10%, which wouldn't be bad, but just keeping in mind that is a possibility. There's other macro factors that we're seeing in the markets, like policy, like Supreme Courts of the United States ruling things related to tariffs that could impact greater market direction. But overall, you have a uptrend in the current uptrend that is followed by a slight correction downtrend in the short term that they're looking to continue up into $40 with a support at 35. So that's kind of the current level. So margin for profit in the current trend, if they were to hold, would be about a 10 to 15 to 20% margin for profit if they hold above 35. So that looks good. Now that's the short term, and that's just kind of looking at their overall trend that we've seen really the last year, right? This kind of uptrend where they've slowly been building market cap and pretty consistently rallying. Then you get into indicator, I guess, number 6, which is the financials. When we look at the financials of Applied Digital, they are just under $10 billion in market cap. What's interesting is they were pricing in slightly before their earnings but they were under $30 a share at this time right before their earnings. Um, and what you could see is we had earnings targets for APLD and Stockmates. I'll show that we have these for stocks nearly every week. But we had earnings targets for APLD. The bullish target was $39 to $45. We actually hit the bullish target of 39 right after earnings. Mid ranges were low to mid 30s. Now, it was about $24 a share when we made this projection. So low to mid 30s is where they're kind of the mid 30s right now. They're holding, and that means their financials carried some of their momentum. And if it can continue, the technical side, they're most likely could see a value of around 12 to $15 billion in market cap. A lot of not just comparable companies, but looking at their pipeline of about 15 billion with CoreWeave and other AI companies, it would make sense that their market cap would be close to, if not exceed, their pipeline, their deals that we know they're getting. And so not only that, but they increased revenue to over $126 million in revenue this last quarter. So once again, if it reached, let's say 12 to 15 billion, that would be a 30% increase to 50% increase from here, which would mean they would be up around $50 to $60 a share, which would be a breakout into serious all-time highs. But before that would happen, we would see more validation of that $35 support, et cetera, into technicals. But why we would see a larger valuation for them is because the revenue has increased so much. So revenue is up to 126 million last quarter. That's an all-time high for them. 250% year over year. Net income was up 86%, still negative, but the infrastructure is what's interesting. Not only do they get the AI income, but they also get the Bitcoin mining income. So they got two things because they converted mostly from Bitcoin to from the Bitcoin industry to the AI industry. And they still have pipeline, they still have service, they still have work that they're doing related to the crypto market as well. But they did change their name from Applied Blockchain to Applied Digital, pivoting more towards AI infrastructure. And so their revenue is still holding very strong, increasing 250% year over year. And their balance sheet is up to 5.2 billion. So they've increased their assets up large to 5.23 billion in the last quarter, which is an all-time high once again. So up 568% on total assets. The problem is they do have some liabilities of about 3 billion. So their equity is at about 2 billion, which is fine. That's healthy. Plenty of runway, years of runway. If they keep up their current spending and current revenues, they don't have any issues with any of the balance sheet. It looks very healthy, and their income statement looks also like it's growing. Their revenue is growing, and even their net income is narrowing there, meaning it's getting more positive. So, or not more positive, but closer to positive. So that's kind of the financial side. And then number 7 of the indicators we're watching, it's going to be just the margin for profit and everything else. So long term, I like it. We're continuing to hold. Short term, there's nothing really that's really grabbing my attention on a short term trade. Maybe we could go for that 10% swing, 15% swing up to $40 a share, but there is that risk that it doesn't hold $35 and it sells back down. Maybe not 25, but that there is still some more risk there. And you could see, just kind of taking a step back into this further time frame. RSI MACD is way up. It's expected because they're in such a fast growing market. But in the short term trades and volatility, I was expecting a pullback from 40. We did see that resistance get validated. They did pull back down, and now it's just a matter of them holding 35. They hold 35. We see that level hold throughout the next few days and maybe even into next week, or they continue some of the runs or even break out above 40. I don't have any problem entering trades at any time. But from a risk to reward perspective, there is that margin of profit of about 13% potential. And then you could cut losses, maybe risk, 1-2%. And it can make a lot of sense. But in the kind of greater trend that you see over the last few months, they are up big. and they got some levels to validate and stabilize around to know that they can really hold this price point. So there you have it. There's the indicators we're watching for APLD. Hopefully this is helpful for you. If you do have any questions, again, some of the targets for Applied Digital, anticipating those corrections today in Prophecy AI. We have a training later today on how to use this AI. I use this because it allows me to take all of the analysis I normally do, and we've ingrained it and put it into the best models in the world with data that they otherwise don't have. So data that's not normally given or that is accessible even by Grok or OpenAI or Claude or Gemini. We source that data and put it into these models. And this is our focus here, in this our company here, which is Prophecy AI, is to serve investors to give them the best AI models. We just updated. I could even go, look at our software dev. We just updated this more. All Gemini Pro 3, all AI models are fully up to date using the latest AI models available. So you don't have to go pay $300 a month for Gemini or for Claude or OpenAI. In fact, you can get them all together in one place with specialized financial analysis on all stocks. You can get the projections and even do quantum analysis, IonQ, Rigetti, and others. And I would encourage you, tune on in. First link in the description for the replay. And then if you haven't tuned into a live session for this, we are going to be doing that today as well. Later today around about 2:30 Pacific time. We just added some new features as well, which I'm excited about, which include market connections, seeing the different markets, how different companies are connected in their individual sub-markets, and then the micro markets inside of those markets. Even visualizing some of those markets is kind of where we're going, seeing how companies are connected, getting through and running the analysis on stocks to get projections from top AI models. So if that's you, go have a look at the link below. If I earned your thumbs up, hit the like button, do consider subscribing, and I'll see you in the next one. Thanks so much for watching.